Feroze, we have income in your hand, especially if you are someone who's enrolled as per the new tax regime. But then I also want to understand from you, will you be calling the decision on LTCG and short-term capital gains tax as one of the showstopper announcement? The question is also coming from a point of view where we have more income in hand as per the new tax regime and as per the new tax regime taxpayer. But you're also looking at consumption. We're also looking at raising high household expenses. We're also looking at people getting in more into equity and capital markets. How would you call or how would you rationalize this particular decision or announcement?
Firstly, yes, Kavita, I think it is a decision which is prudent, and I think it's still not taken so badly, at least today, by the markets, because taxation for all the assets has been tampered around with. Right. So if household saving is about 800 lakh crores in India, that's all assets are going to fight for the same pool. So if you look at the real estate taxation getting a detriment, and there is LRS taxation becoming better, international funds taxation becoming better, mutual fund taxation net becoming better, except the long term category, because most people don't use a mutual fund for less than 1 year, and that 20%. So to answer your pointed question, I would say that the change in capital gain tax in the long-term category is the minimum envisaged. Along with that, the relative disattractiveness of taxation for other assets, especially the physical asset real estate, has not put capital gains or equity in the back foot. That's point one. Point two, I think the new tax regime which you were discussing, has only a 9.2% tax, even if you have a 15 lakh salary. Okay, 9.2% tax for 7 times more than the per capita income of the country is the least it can get, right? So that's the motivation to get into simplistic, no deduction, new method and pay 19% tax if you have a 20 lakh salary. If you have a 15 lakh salary, you will be paying 9.2% tax, approximately, give or take. Is a very, very attractive tax rate. And I think the new workforce is the one which is choosing the new tax regime because they don't have any commitments of insurance policies taken in the lieu of deductions for long periods of time. So I think more money in the hands, more money in the equity markets is possible. Of course, at the face of it, capital gain tax increase seems very detrimental, but relatively, equity has not been hampered so much because real estate taxation has taken a beating. Only that fair market valuation clarification, which we were waiting for, I'm sure Tarun can throw some light on it, because 2001 fair market valuation, if that rule remains, historical properties will still have some saving grace. If that's gone too, then I think this taxation of indexation is reasonably retrospective beyond the century as well.
Sure. Feroze, I want to focus with you on the youth skilling part and also the education part, where almost 10 lakhs for higher education domestic institution has been added in terms of benefit, and also almost, loans up to 7.5 lakh with a guarantee from a government promoted fund. This will also benefit almost 25,000 students every year. Talking about upskilling or, talking about education loan, very important financial goals for parents. How can one actually implement all this in their financial portfolio strategies? How can one understand these schemes now, Feroze?
See, of course, from an understanding standpoint, a lot of fine print needs to be read. But I think principally what's happening is, I think the guarantee of the 7.5 lakh loan will definitely impact the interest rate. So I think India culturally has not been taking as much education loan as it has been globally. So this paradigm shift is prompting to be addressed over long periods of time. So if you look at higher education, people who couldn't fund it as parents, they fund it themselves in India. But globally, even HNI children take a loan for their education purposes. So that's point one. Point two is the fact that if you are going to take education as an item, which is an important goal, the education inflation which we computed in especially higher education turned out to be 14.3% over the last 10 years itself. If you look at longer periods, the inflation in the education space, especially higher education, has hovered around 12 to 13%. So trying to make sure that this expense, which is going to be a surprise expense when your child becomes older, that those are longer periods, right? You start preparing sooner. So people are generally falling short from what they have actually planned for. When you look at personal finance objectives. People had planned for an education corpus of a certain amount, but the education which they were targeting has a reasonable gap. So I think I'm very excited that promoting loans will bridge that gap, which has been a surprise part of inflation over the last 10, 15 years.